Welcome to Paladin Financial Talk. I am your co-host, Tony Shore, and I am excited to be here today. We have my favorite Paladin host, of course, is Ellie.
Tony, thank you so much.
Ellie Robinson. I
Hi.
love that. Yeah. I love that you're here.
I love your energy always, Tony. I always appreciate it.
I try to bring it. I drank 40 cups of coffee just to get ready for the
I
show
can tell.
today.
It's not a bad thing. It's not a bad thing.
No, it isn't.
Thank
How
you,
have you
Tony.
been? Are you busy?
I've been good. Let me think. Personal things. I guess I was out of town this last weekend. I'm originally from Iowa. I don't know if you knew that.
Yeah, I knew that.
Northwest Iowa.
Yeah,
so,
I like you despite of that. In
Oh,
spite
thank
of
you.
this. No, I'm kidding.
So there's at least one weekend a year where I round up the high school girls and we all meet up at someone's house.
That's
so I went
right.
down south.
I heard you were going to do that. How was
Yeah.
that?
It was nice. We went down to Adrian, Minnesota, and so small farm town.
I grew up in Worthington, Minnesota.
That's right.
About
yeah,
5 miles from the Iowa border.
Exactly.
Went to Adrian many times. Adrian is right.
It's right.
In fact,
minutes.
It's really close to, it was less than that. It's probably about 12 minutes from my house or 15 because I lived on that side of Worthington.
On the west side of Worthington.
Yeah.
That's so funny. It's such a small world.
Isn't it?
Yes.
So what were you doing in Adrian? Is one of your friends from there?
Well, yeah, she built a house down in Adrian. She's a realtor down there, married a farmer, and they have this big, beautiful.
Married a farmer.
Yeah.
I was like, why?
Yeah, why? And
why did she move? Why would you move to Adrian?
It's fun though to get out of the cities, and we went out to Sioux Falls for a night.
Oh,
I love Sioux Falls.
Sioux Falls, South Dakota. I did radio in Sioux Falls.
Did you? Okay.
In high school and right out of high school, I did radio in Worthington, my hometown, and then I kind of a stepping stone. I went to Sioux Falls, worked for a couple of stations there, KJIA and 93 KKRE, which was a rock station there at the time.
Oh my God,
this is back
right
in the
up your alley.
mid 80s, yeah. But then I moved here to Minneapolis and did WLOL and worked here. But Sioux Falls is a great town. It's one of the fastest growing cities in the United States.
Yes, it feels so safe and it's always clean. The downtown area is just so charming.
They've really fixed it up.
Yes.
It wasn't that way in the 80s.
Oh,
it was dirty and kind of nasty, and it got run down.
Okay.
And the falls were a mess, right?
Oh.
And they completely cleaned it up. And really, Sanford company, the healthcare company, he came in, Sanford, and basically owns that town. And the influx of money from Sanford really helped clean it up.
I believe it.
Yeah. But that town is amazing. It's one of those towns where it's grown a little too fast. It gets quite crowded in areas.
South Dakota doesn't have any income tax, so it really brings in out-of-state people.
Yes, it does.
That's why it's
when
growing.
you're talking about retirement, looking at places to retire.
Yeah. Yep, exactly.
I mean, you sacrifice a lot by moving to South Dakota, but
it's
depends.
A lifestyle choice.
Yeah. Yeah. Well, and it's the biggest town in South Dakota by a long shot.
Is
Sioux
it?
Falls is.
Okay.
Oh, yeah.
Okay.
The only thing close is Rapid City. And
yeah, that's true.
Yeah.
I do love going out to the Black Hills, though.
Oh,
it's
the
gorgeous out
Badlands
there.
Are beautiful.
Yes.
Yeah. Yeah.
It's a long drive to get out there, and it's really boring to get out there. But once you're there, it's gorgeous.
That stretch across South Dakota is tough.
So tough.
You can always make a stop in Mitchell, South Dakota, to see the Corn Palace, an entire building covered in kernels of corn.
Yes, I've never stopped, but
no, that's okay. It's all right.
You just keep driving by.
It's all right. So let's get into it today. I know we've had a lot of small talk, but you said you called the show a solution to retiring early. Retiring early, what does it mean to retire early?
Well, usually when you talk about retiring early, it's because it's before 59 and a half. That is a notable age in this industry just because you can't tap into a majority of the retirement accounts out there before that age. So if you are trying to retire at 50 or 55 or whatever that goal is, we need to try to figure out a solution for you to try to have an income stream in those gap years until you can tap into your retirement accounts. And so I wanted to talk about one solution that might not be a fit for everyone, but it is a really good option if you are the right person for it, and go from there.
Yeah, that sounds good. Yeah. Where do you want to begin?
Well,
it's too late for me to retire early. I'm kind of committed. I'm going to do this as long as my voice holds out. I'm going to do this job.
You are in a good position where you can just work forever, Tony. You really do.
I hope so.
Like, yeah.
I hope so. Yeah.
Well, a reoccurring topic that we talk about with our clients is making sure that you're well diversified in the 3 tax types that you can have your money into. So you have your taxable money, tax deferred money, and tax-free money. And so usually the tax-free bucket of money is obviously the most enticing, but it also has the most limited amount of options. But nobody wants to pay more taxes than they actually have to. And so I wanted to focus on that bucket today specific.
Yeah, we all want to minimize our tax burden, right?
Exactly. Exactly. And so what we had found as an option is you can put your money into a savings vehicle over time, have this minimum guarantee rate of return, right? And with the potential for higher returns, and there's no contribution limits associated with it. The reason why I'm pointing that out is because along with retirement accounts, all of them have retirement limits on the upside. So Roth IRAs, for example, you can put in $7,000 into that if you were under the age of 50 or 8,000. So all of these accounts have maximums that you can put into it.
Sure.
So having a vehicle that doesn't have a minimum or a maximum provides flexibility.
That's huge.
And being able to access it down the road completely tax-free is the part that everyone likes to hear. So that is one of the things that I want to focus on today. And
you're talking about cash value life insurance that provides that.
Yes, exactly. Okay. And so that's something. Usually life insurance is not always a positive thing to
right. Well, most people don't think of life insurance in a positive way unless they're the beneficiary of a policy, and even then it's usually after a tragedy.
Yes. And so there's just so much stigmatism around permanent life insurance or cash value life insurance. So I want to really bring to light that it's used as a solution. Like, this is if you are trying to attempt multiple goals in your life. I want to retire early, and I want to make sure that my family is covered in the case of anything happens in my working years, and making sure that everyone is okay there. So it provides a death benefit too at the same time.
Right. But the part I think people don't understand, a lot of people, and it's understandable. Life insurance, you think, okay, if I die, I have life insurance to help my family after I'm gone, which all these policies provide or offer a death benefit. But you're saying that a cash value life insurance or permanent life insurance policy can offer benefits while you're living.
Exactly.
Okay.
Exactly.
Interesting.
Yes. And so more specifically, when it comes to cash value life insurance, I want to focus a little bit more on indexed universal life, which is acronym is IUL. So I'm going to start using IUL throughout this conversation here. And that has become the more modernized, more popular and beneficial tool for the right people to use in financial planning because of all the flexibility it gives you.
Yeah.
Ultimately.
Yeah. And flexibility is good.
Mm-hmm,
right.
Exactly. So how this might differ from other types of life insurance policies. So I feel like most people are most familiar with term policies, right? Like, term policies, it's temporary, has very low premiums, and it does not accumulate cash value over time. So you can have a 10-year policy, 15, 20, 30-year policy, whatnot, and it locks in those low premiums. Whereas I feel like whole life insurance is also somewhat well known in the industry. It's an older form of cash value life insurance, which will accumulate a cash value at a fixed 1 to 3.5% guaranteed rate over time, which is pretty low, relatively low.
Yeah.
So that's where IUL offers flexibility and higher benefits than what a whole life insurance policy can offer.
Yeah, they've really improved these policies. In fact, as of late, I've heard about some policies in the index universal life and some of these that they've really made them more attractive.
Yes, they just keep getting better and better, honestly.
This isn't your grandfather's life insurance policy.
No.
That's for sure.
Which, speaking of, I have a CFP in the industry, a friend of mine, and he saw a life insurance policy statement the other day issued in 1947. 1947.
Wow.
It was a statement from that far back.
Wow.
Yeah. I was like, that's crazy. Anyway, the industry has evolved significantly since then. So IUL, where it differs in flexibility, I just keep using that word because like that is the biggest reason why people like using IUL is you can overfund the policy. So with premiums in other types of life insurance policies, they give you a set premium where you're like, I have to pay $150 a month or higher or lower, whatever that premium is set at, and you have to pay it in.
Right.
Whereas where IUL, you can overfund it. And when you overfund it, it will accumulate that cash value a lot faster. And it can be tied to market performance, but it's not directly exposed to market volatility.
The risk factor. That's exactly huge.
So there might be caps on it where you can make a maximum cap of 9%, but that's still better than a 1% guaranteed fixed rate, you know?
So the market, if the market goes up 20% in this cash value life insurance policy, you may only get 9 or 10, but if it goes down 20%, you can no principal loss.
Correct. Yeah. And I mean, you still have to realize though, it is a form of life insurance. So there is a part of the premium that you're putting into the policy that is helping pay for quote unquote the cost of insurance, which is what it costs the insurance company to operate and cover the death benefit on your life if something were to happen to you.
Right.
So like some of that money is going specifically for that benefit.
For the death benefit.
But then it's also split into a type of investment vehicle for yourself.
Sure.
And along with overfunding it, I mean, if there's a year where you just can't fund it, you can do that too. Like you are not required to pay into your life insurance like policy. Like you can waive a year or two. It'll eat at the death benefit or the cash value that might have accumulated in there. But again, it just gives you more flexibility. If something were to happen, who knows what might happen. But that's
interesting.
And so with cash value life insurance, you can access your funds through policy loans or withdrawals completely tax-free. So unlike retirement accounts, where there are penalties for accessing it before a certain age, that is not the case with life insurance whatsoever. So that is exactly what a household might need in order to help bridge the gap on any income years or any years that they need income in before they can start tapping into their normal quote unquote investments. So does that make sense?
Yes, it does. It does.
Sometimes I feel like I do a lot of talking and I'm like, wait a second. Okay, good. Good.
That's really good.
Along with IUL is you can also change the amount of death benefit on your life, which other policies don't really let you do. And so you can always drop it or lower the death benefit is if you evolve in your life and you're like, oh, I don't need this much, then you can go ahead and request to drop that death benefit. And you can request to increase it as well. There might be an underwriting process if you're trying to increase it significantly.
Sure.
But that's normal, but you don't have to add another policy. You know, you can just have that same policy and just increase the death benefit.
Because other more standard types of policies or older types of policies, different than this, different types of insurance, it's the death benefit is locked in. It is what it is.
Correct. And so a lot of times with some of my clientele, they'll already have a term policy that they got in their early 20s, but their life has evolved. They have a huge family now, 2 or 3 kids, whatever the case is. They're the breadwinner of the family. And I say $100,000 death benefit is not enough. You need more in case something were to happen to you. Like you still need to help provide your spouse and kids and living their lives normal and not needing to sacrifice anything in their lives if something were to happen to you. So then I'll start layering on other life insurance policies on top of that.
Sure.
But you don't have to do that with IUL. You just keep that same policy and you just fluctuate it. Essentially.
Yeah, I didn't know that you could change the death benefit.
Yeah, you can.
That's interesting.
And IUL also has riders that you can tack onto it. And so a huge one that we talk about here at Paladin is adding a long-term care rider to IUL insurance. It just provides a layer of protection to cover any long-term care expenses that might happen towards the end of life, which I think a lot of people know or have either to some degree experienced in their own family affairs where it is not cheap to pay for long-term care.
Oh, I know that. My mom is in long-term care, and the overall bill before anything is over $11,000 a month.
Yeah, it's crazy.
And fortunately, she had a type of long-term care insurance, but if my mother and father would have had access to one of these policies where, it had a large death benefit or it had some cash value, you can actually access some of that money with a rider that will allow you can spend down the death benefit before you die. If you need that money before you die, you can utilize it.
Exactly.
And that's huge because you're putting all this money into a life insurance policy. It'd be great to know, hey, if I'm going to need a ton of money in retirement for something, especially like long-term care, it's nice to know you can access it.
Yeah. You hit like the nail on the head there, because traditional long-term care insurance, they have been notorious to just jack up whenever they want. And then there's still a roll of the die where you might not really need it, because there is a chance you'll just live a long, happy, healthy life and you never need to use that policy. Whereas using a life insurance policy with a long-term care rider attached to it gives you, again, flexibility in case your life ends up taking that direction. Yeah, it just seems like it's the most versatile language to use when talking about IUL.
Yeah, it's one of the biggest advantages then to the indexed universal life or cash value policy that you're talking about.
Exactly.
Is the versatility. It allows you to do all these things. Well, that's impressive. I mean, this is really important too. I think that people don't fully understand the more modern and newer forms of life insurance and all the benefits they're offering to make it more attractive based on what people's needs are today. And, now 2 out of 3 people, because we're living longer, 2 out of every 3 people are going to need long-term care. Right?
Exactly. Right.
It's almost 2 out of 3. It's like 70-some%.
Yeah,
right?
Exactly. So right, Tony.
That's tough. And you also you can use it for many other things. The death benefit can go toward a lot of things. But I'm glad you talked about this. And I mean, obviously it is a solution to if you want to retire early. Building up a cash value life insurance policy has a lot of benefits.
Yeah, it's an option, and talk to your financial professional, obviously, about it, because it's not a one size fits all. Like, I want to clarify that. Like, it is for a very specific type of person who's trying to achieve something in their life, and they're, have a lot of excess cash flow. Their expenses are low, and we're trying to provide the best solution for them. So it can be a really good fit for the right person or the right household or whatever the situation might be. So, I mean, as fiduciaries, that's what we're going to bring to the table, is saying, hey, based on what you're telling us, based on what your plan looks like right now, this is your best option.
Excellent.
We're not just trying to sell you life insurance for the heck of it. So
no. And the thing about Paladin is the whole team there and what you guys do, your wealth management, retirement income planning, investments. And if insurance can be used as a tool in somebody's plan based on their needs, if it's going to help reach their goals, you'll look at it. If not, no, you're not insurance salesman per se, right?
Yeah. We're all licensed to sell it, but that's not our bread and butter at the end of the day. It's holistic financial planning and trying to solve the problems that, are in
and everybody's situation
life.
is different.
Yeah, exactly.
So, this might be a perfect tool to help reach their goals.
Exactly. So if we do find someone who is a good fit for this and we walk them through it, and I'm keeping everything pretty vague today just because it can be on a case-by-case basis on what kind of riders we might want to use for someone, and then we'll really dive into it in an appointment just on life insurance alone for a client. And so just talking high level today, and it really comes down to, okay, is this something that we seriously want to consider for your plan? And let's see if we need to implement it.
All right. Well, Ellie, before we go, look right into that camera and tell our listeners and viewers out there how they can set up a consultation if they have questions about this.
Of course. Well, please give us a call at 651-842-8406. Or if there's any topics that you want to hear about on the podcast, shoot us an email at info@paladinfinancial.com. We are excited to hear from you.
Excellent. Ellie, great show today. Any topic? Next time, can we talk about why chickens hate snowblowers?
Well, it needs to be finance related.
Come on, Tony. Because I had some questions.
This is a good thing that we're bringing it up, because usually in the summertime we will expand on more lifestyle conversations and not so much like specific financial planning. And I am interested in doing a podcast on wedding planning specifically, just because it seems so relevant, where, most people who are getting married, it's their first time doing it, and there's a lot of things a lot of costs associated.
Is there something we should know, Ellie?
No, there's not.
You're
not for
about
me.
Wedding
it's
planning?
Just, it's everywhere.
Oh my goodness.
That and babies, they're everywhere. And so this is the year to start talking about lifestyle planning.
Sure. That's awesome.
Yeah.
All right. Well, listeners, that does it for today's episode of Paladin Financial Talk with our host, Ellie Robison.
Thanks, Tony. Was that too short? And the recording. Oh, it's still recording.
I don't know why it's spinning. I'll have to edit the end off.
Yeah.
That's weird.